I'm noodling a long trade in Netflix, and I wanted to use the Option Master Chartist market location screen to just quickly cover some of the criteria that I use when analyzing a trade. First of all, Netflix is good to go as far as a candidate for trading because it has good liquidity, and liquidity is probably the single most important criterion for selecting a stock or an ETF to trade. If you check Doe.com, you'll see that Netflix has 3 out of 4 stars. And from the material we can get off the front page on the market location chart, we can see that liquidity is more than 4 million shares a day of the underlying. So the options are going to have good liquidity also. Criteria number 2 is Netflix is at the very bottom of the trading range. So that makes it in position for a long trade if indeed that opportunity presents itself. So let's examine, do we want to make a long trade in Netflix, and what criteria would we use to determine that? And what kind of strategy would we set up ahead of time and then finalize right before making the trade? Well, first of all, this would be a counter trend trade because we can see that the trend in Netflix is down. It's a bearish trend, and that's determined by the daily technicals, the middle panel, the trend. This is a long and intermediate term percentage price oscillator, and it is below the zero line, which makes the daily trend bearish. The percent R is below the zero line, that's bearish. And MACD, which shows momentum, is below the zero line and getting lower. So Netflix is in a clearly bearish position. So a long trade, if indeed we see that opportunity arising, would be a counter trend trade, which means you'd want to keep size small because the wind is going to be in our face, even if we do get a good push in the short term. But let's look at the lower panel and see what we've got going for us with Netflix. We can see that the historical volatility is in the 64 percentile. That's high. We should get a good move. Average true range is 6.7 points, which is a decent move, and that would be from yesterday's close to say the average of today's high or today's low, or the difference between today's high and today's low, whichever is greater. But if that allows for gaps, but 6.7 is pretty good. That's almost a 7-point move. We can see the technical score is a minus 14. That's right in line with the bearish posture. But as far as timing tools are concerned, momentum we've already mentioned is low, but the 65-minute momentum and the 130-minute momentum have turned up. It's at the lower end, at the very low end of the RSI range, and CCI is below 100. So it's in position to make a bullish move. It's a contrarian play, absolutely, but it's in a position to do that. And if it's going to be a real short-term trade, so we're going to look at the 5-day projections. The upper end of the range is 140. The lower end is 87.86. So we've got 94.13, 140. We've got about 6 points potentially to play with. That will impact our strategy. But for actually timing the trade, because it is short term and it is counter trend, we're going to use only the upper half, the charts only on the upper half of the market location screen. And this is the methodology that we'd use. The middle panel of the 65-minute technicals, and you can use either 65-minute or 130. That's strictly a preference deal. We can see that the short-term trend is down. So before we would even consider initiating a long trade, we have to see a little crossover here. We have to see these trend indicators turning up. And in conjunction with that, we would have to see the Williams percentile cross above the zero line, and we would have to see momentum, which is in the lower panel here that says MACD. We would have to see that continue to be blue, which means it's positive and rising. So those would be the basic criteria that we would need to initiate a trade. And then we can get the quick visuals on the 65 and 130 minute breakaway charts, because we would see the price bars cross through the moving average lines that are currently heading down. So if all of those things do occur, then Netflix would be in position to initiate a long trade. And the additional homework that you have to do before considering the trade is putting a strategy forward. The implied volatility rank for Netflix is about 40%, which means that we can do a debit trade if we want to. I'm not saying that that would be the trade would make, but if we were to do a debit trade, then our long strike would be just below the market price at the time. We have 6 points to play with, so we would probably do a 4 or a 5 point debit spread, and that would allow us to capture most of the expected move. And if we were super bullish at the time, which may or may not happen, doesn't look likely, you could finance your debit spread by selling an out of the money put below the current price at the time of the trade. I went through this pretty quickly, but I hope you got some idea of how you can use just the front page of the of Option Master Chartist, the market location screen, to quickly go through your different watch lists and get some ideas about potential trade setups.